Well, hello and welcome to an all-new episode of the Transfix Take podcast, where we are performance-driven. It's the week of July 12th, and we are bringing you news, insights, and trends for shippers and carriers from our market expert, Justin Mays. Mays, it is always great to be with you. How's it going?
Hey, Jenny, it's great to be back with you as well this week as we start the long stretch of summer without any holiday disruptions until Labor Day weekend.
Well, Mays, let's not get too comfortable. You know how it goes. We blink, the summer's gone, so let's just enjoy this nasty heat. And maybe even a sale or two?
That's right, Jenny. Today is the first day of Prime Day. And to be honest, I don't believe we're going to see too much disruption brought on by Prime Day in the full truckload sector or even the LTO or partial sector. But as you mentioned last week, we're going to keep an eye on where potential stress points may appear within transportation.
I agree with you, Mays. I really am not expecting it to be a huge market shift or really anything to write home about. But what I am looking at it for is consumer behavior, any shifts or any trends towards the holiday season, especially as we continue on in the soft market.
That's right, Jenny. The market's continuing to soften at a national level, but it's not seeing the declines that we experienced last year from the 4th of July holiday to the following Monday. This year, we've only witnessed around a 2-cent decline in rate per mile line haul compared to last year, where the Monday following the 4th of July week, we saw a nearly 10-cent decline rate per mile on the line haul. So we are still seeing the market soften, just not at the same level or speed as we experienced last year.
So, Mays, there's obviously been a shift over the last couple of years, but this year seems to be the anomaly. So are you expecting somewhat of the same type of behavior?
Well, Jenny, I actually do believe it's still going to follow a similar pattern to what we experienced last year. We will likely see a leveling off, but we're still pretty far from the bottom we saw back in the first half of May. And I don't think there's any opportunity that shippers are going to get rates back to that level.
And this is not the norm. Let's not forget, shippers have had control of the market for quite some time now, probably close to 3/4, and we're shifting over to the carrier side of a flip. Mays, what are you looking out for?
I would say the one thing that's really catching my eye is that every time we've come across a slim tightening in the market due to some regular holiday volatility, the market has continued to level up and not dropped back to where rates were prior to the holiday. We saw this Memorial Day weekend, and we're seeing it yet again the 4th of July weekend. This is something I'm going to continue to watch carefully. I do, however, believe that we will see the national average go back to where it was prior to the 4th of July holiday and potentially a little bit lower. But this is something, again, to continue to watch, because if it does not decline back to where we were prior to the holiday weekends, then it's a clear sign we are past the rough parts of this cycle.
I would hope so, Mays. I think there have been a lot of indicators that prove we've reached the bottom, but what say you, Mays?
That's right, Jenny. There's a few signs pointing that we seen the bottom of the freight market, and we're going to be in a steady, stagnant market for the next month and a half, with a still unknown fourth quarter, but something that we're going to really look into and try to diagnose ahead of time. But one of the big call-outs is that in Q2, we saw the net loss of trucking firms set a record. And that is a big call-out, because that is capacity, A, leaving the industry, or B, running under larger asset fleets. Either way, we are seeing this force some tightening in the spot market as contract rates continue to decline. And as we know, as the gap between contract and spot lessens, the more opportunity for volatility to appear in the market heading into Q4.
And not only that, but all eyes are on volume and where that stands as we continue on through Prime Day. There are a bunch of other competing retail sales throughout the summer. And then, of course, as we head into back to school and holiday season. That said, Mays, you know what it's time for, the regional breakdown. Now, I know we want to give shippers a little bit of a leg up here, so why don't we start in a market that's more favorable to them? The South and some of the larger markets, Dallas, Fort Worth, and Houston.
These markets saw a nearly 3% decline in the average rate just from last Monday to today. Now, moving on west to the West Coast, a region that we've continuously watched carefully, but called out the beginning of a flipping market as rates declined going into last week, we are seeing this trend continue. Rates out of Southern California and other larger markets in California are seeing more significant declines. Take Los Angeles as an example, where we saw rates on average decline right around 2%.
Okay, and what are you thinking these are indicators of, Mays?
These two examples, Jenny, are perfect examples of a changing seasonal trend that we traditionally see in the industry. As we've been calling out for months now, this year we are certainly going to continue to see the seasonal trends stand out, even if they are a little less volatile than we've seen in past years.
I know I geek out when we talk about seasonal shifts like this, but this is definitely something to keep an eye on. Now, why don't we drive on down to a market that has already flipped, the Southeast?
Rates out of even the largest markets, such as Atlanta, by volume, saw decreases since last week, nearly 3% out of Atlanta, Georgia. And Florida continues to move in the shipper's favor as rates have declined out of every market in Florida and in the entire Southeast.
Things are definitely moving along. And you know what I want to bring up now? The coastal region. What's going on there?
Just about every market except for Norfolk, Virginia, saw declines from last Monday to today. And the largest markets by volume, similar to what we're seeing in other regions, are showing larger decreases. When these large markets by volume are showing larger decreases, that points to me that we are going to continue to see this trend going into next week. And it will also have that domino effect into the smaller markets that move less volume.
Now, I know the same cannot be said about the Northeast and the Midwest. So give us a breakdown of what we can look forward to there.
It's normal that right around mid-July going into August, we see the Northeast and Midwest tighten. And it's certainly taken place in the Midwest. Rates saw a very slim decline since last week, which you would expect coming off the holiday week. But the larger markets by volume are still seeing tightened capacity and slim increases out of these larger markets by volume. And although I do believe rates will continue to see a slim decline in the next few weeks, it's not going to be nearly as noticeable as it is in the other regions we mentioned. Now, the Northeast is a slightly different story. We are seeing some markets tighter than others, but the largest markets, Harrisburg, Pennsylvania, and Elizabeth, New Jersey, these are volume drivers in the Northeast and are continuing to see some softening with decreasing rates. Now, other markets in the Northeast are actually seeing increasing rates. So the Northeast is going to be one of those stubborn regions, similar to how the South was for a few months, where we're going to see rates fluctuate week to week, depending on the demand and capacity.
All right, Maze. So let's talk about carriers and where they fared out in terms of this last holiday with July 4th. Were they able to take advantage of it? What was it looking like on their end?
That's right, Jenny. Carriers were able to take advantage of the holiday week and push rates upward. But as expected, they are declining and will continue to see decline in the next few weeks. Now, at the same time, carriers are now facing an increase in diesel prices as well. This week, we saw diesel increase for the 6th time this year. Additionally, this was the largest increase experienced since January. But we are still $1.70 below the levels of this time last year. So not only is the freight market loosening for carriers, unfortunately, but diesel prices are rising. So it's something to continue to keep an eye on because we want to make sure that more capacity doesn't leave the industry. Otherwise, that spot the contract gap is going to lessen at a quicker speed, bringing volatility into the contract market.
That's right. And we know that diesel tends to put the smaller carrier out of business. So we're hoping that they get up some relief there, especially as quickly as possible given the market. But why don't we shift gears a little bit and broaden out to the greater supply chain and what's going on there, Maze?
That's right, Jenny. It's also important to call out imports. And we haven't talked about imports for quite a while. And I'm going to take it more at a broad view. And I'm actually shocked to see that imports are still actually outpacing the performance year to date that we saw in 2019. I don't think this has a significant impact just yet on the freight market, but it's something to keep an eye on. Now, this is something to keep an eye on as imports do drive the truckload demand in the United States.
So, Maze, I know we haven't really broached this subject quite yet, but there is an elephant in the room. Do you want to address it?
One thing I'm keeping an eye on is the impact of the UPS situation we have going on, because the Teamsters contract ends on July 31st. That's just a little over 2.5 weeks away. And this is something extremely important to watch out for. Even though this is for the partial segment of transportation, it could have more impacts as a domino effect across different modes of transportation. So I do think that there's going to be a deal reached, but In the case that there's not, this will certainly have an impact in supply chains, as UPS is one of the largest carriers in the country.
Well, as JOC's Kathy Robertson said, it is the year of the union, so we are definitely going to see what's happening with them in the coming weeks. But Maze, always a pleasure talking to you.
Jenny, it was great talking to you today as well. I love taking a look under the hood at the freight markets, and I'll see you next week.
That's right. Same time, same place. Everyone, drive safely. All views and opinions expressed in this podcast are those of the speakers and do not necessarily reflect the views or positions of Transfix Inc., or any parent companies or affiliates, or the companies with which the participants are affiliated, and may have been previously disseminated by them. The views and opinions expressed in this podcast are based upon information considered reliable, but neither Transfix Inc. nor its affiliates nor the companies with which the participants are affiliated warrant its completeness or accuracy, and it should not be relied upon as such. All views and opinions are subject to change.